What deductions can I take as a W-2 contractor? So that means you're an employee.
So yeah, most of those were wiped out with the tax law change beginning in 2018.
Miscellaneous itemized deductions went to the wayside.
Yeah, so if you used to do those, what was the 2106 called? The employee expenses?
Yeah,
unreimbursed
unreimbursed
expenses.
Unreimbursed expenses are gone, which is why teachers, boy, it sucks to be a teacher right now.
Yeah, now if you're in a state that still taxes you, like California rather than Nevada, you still want to tell us about any of those expenses because your state may still allow those deductions. But yeah, most of the other deductions are gone. I think the school teacher deduction is the only one I can think of that's left. The $250.
The what?
The $250 educator expense.
Is that still there?
I think it's still there.
Yeah.
If I'm wrong, I'm sorry.
Well, I'm thinking of a contractor and they're running around, they're driving their car, they're buying tools and all this stuff. And can they write it off? No. They are completely toast. You're taking the standard deduction, or you're going to itemize, but you're not, when you're itemizing, you do not get the benefit of those unreimbursed expenses. Let's see, it says teacher is under adjustments.
Yeah, that's where it used to be.
Yeah, so.
And I thought they had retroactively.
Yeah, somebody else is saying the teacher 250 is still there. Oh, we got all these smart people out there. But wait, are you part of the 93% that said that you had to, Now we're going to ask a question. Somebody's going, what is this 90?
So in this case of what to deduct, if I'm like the contractor guy.
Everybody's saying it's still available. They're like jumping on you, Jeff.
Hey, I said I thought it was still available.
Yeah.
So if you're a W-2 employee that has substantial expenses you're incurring, do you think about going independent or working something different with your?
Yeah, I would actually be looking and see whether I could be an independent contractor if that's the case. If I'm having to incur a bunch of the expenses, then there's two things that I'm going to do. I'm either going to go to my employer and say, hey, you need to reimburse me.
Right.
Or I'm going to say, you need to pay me as an independent contractor. But don't hire me as an employee and make me incur all my costs on my own.
Because your employer can reimburse you and deduct those costs.
Right. The employer can do an accountable plan and write off all those expenses. You know, you say, hey, do that. Just don't give me a bonus. Write off all my expenses instead. I mean, it sounds funny, but that's literally it. If you walk up to your employer and you say, look, I'm incurring an extra $3,000 a year. Instead of giving me bonuses or anything else, how about you just reimburse these? It's tax deductible to the company. It's not, doesn't have to go through payroll, so there's no FICA, there's no FUTA, SUTA, workman's comp, and all that garbage that gets added onto these things. It's just flat out cashola in your pocket. I always call it Krispy Kreme money. If your employer says bring in Krispy Kremes, and you bring in all those Krispy Kremes, those are tasty donuts, by the way, if you don't know what those are. So we're talking about tacos and Krispy Kremes. So let's say you bring in the Krispy Kremes. Your company can just hand you a check for that amount. You don't have to report it anywhere. It doesn't go anywhere on your return. That's what the beautiful part of an accountable plan is. If your employer does it, it's great. Now somebody says that an independent contractor, you may lose your bennies, which may cost you more, get them to reimburse you. Robert, I agree. But on the, when you say the bennies, your benefits, you're always going to factor that in. So the employer is paying, whenever you're a W-2, I use 20% as a rule of thumb of what it's costing your employer to have you with the form of benefits. And so they're going to save that. And so I'd be looking at them saying, hey, pay me that extra 20%. Then you can go get your own benefits. And if you're set up right, like let's say you're doing it as a C Corp and you want to be able to expense all your medical, dental, vision, and everything, 100% deductible. 100%. All of your co-pays, everything. So health insurance is the biggest, absolutely. You know, here's the thing is also when you're on your own, right now it costs me about $500 for a primary employee, and with a family, it costs about another $1,000 to cover them. If I went to MediShare or some of those outside sources that are not big health insurance, but that are, they still work under the Affordable Care Act, but they're not typical insurance, high deductible plans, I can knock that down to about $600 a month total. And I can't do that as a big employer. I have to use certain types of plans to cover group plans and stinkolas. We got a lot of questions coming in. I'm going to keep jumping through this. So the long and short of it is the best scenario for you is to get your employer to reimburse you. If they won't, you may want to consider becoming a contractor, independent contractor, I should say, and setting up your business separately. Depending on how much you're making, you could actually save yourself quite a bit of money. If you're an S Corp, you could have the 20% 199A deduction against all of your income, which could knock your income way low. You could avoid the self-employment tax, which is when you're getting W-2, you're paying FICA on all of it. Your employer's paying half, you're paying half. We can avoid a big chunk of that. You can do your own 401k and defer $19,500 of the first amount of money you make into your plan. You can hire your spouse, you can hire your kids, you can do all sorts of fun stuff. So I tend to go a little nutty on this, but get a lot of things. Where do I get more information on that low cost health plan? Go to MediShare, and I don't know how to spell it, but I could look it up. There's folks out there, but you go to MediShare and a bunch of alternative health plans. What they are is they're usually religious groups that get together and say, hey, we're exempt from the ACA, and they're pooling their risk pools. So they're very different, and they're a lot less expensive.
Yep.
What you do is you do one of those, and then you do a high deductible. When I say high deductible, it might be a $10,000 deductible health insurance plan, which costs you very little, because there's very little chance you're going to use it. But if you have a catastrophic injury, cancer, whatnot, they'll come in and pick you up.